Great. All right, let's get started. Welcome to the session. Good to be with you again. I'm using two screens today, so things should be a little cleaner than they normally are. We'll cover a couple things today. I want to make sure, just like our last session, we'll spend a little time learning and understanding the strategy, and then we'll spend a certain amount of time executing it. I know some of the trades we went over the last time we were together have kind of met entry and are moving, so we'll go over those. We'll go over some new markets and new trading opportunities. And once we get to the live markets, if you have any markets you want me to look at, just let me know. But I have a pretty good list here. And so a couple things before we get started. Well, let's get started. Make sure you understand that everything we're going to go over today is equally applicable across all the asset classes, stocks, futures, forex, options, and then of course, across all the time frames, right? Meaning for any financial purpose, whether you're trading for daily income, weekly income, or building, that wealth or retirement. Does that make sense? So anything we're going to talk about today, you apply the same rules to all of it. One strategy, any and all markets, any financial purpose. If you have any questions along the way, just let me know. So as you see on the screen here, what you really have to understand is that, it really is all about supply and demand, right? Any market we're talking about. And you have to understand that the movement of price in any and all of these markets is simply a function of the laws of just pure supply and demand, okay? Buying and selling opportunity is present when the simple and straightforward equation is out of balance. Is everybody very clear on that? No questions or anybody disagree with that? If you do, now's the time. Because I want to take this one step deeper and I want to go over something before we get to the live charts, which will help you understand what we're doing in the live charts and markets that much better. So take a look here. And again, I assume you can see the screen okay? Sizing and everything is fine? All right, great. So I pulled something out of a course, right? The supply demand class. And again, what you need to know is, because I get a lot of questions from people, what time frame should I look at? And all these details. When really, and what about trend and what about all these other things? And for me, it's always the same thing. It's identify where, the smart money, major banks and financial institutions around the world are buying and selling, right? Our demand and supply levels. And then identify the areas where they're not, okay? Where you don't have all those orders. Remember, what causes prices to turn in markets are unfilled buy and sell orders, significant unfilled buy and sell orders. What causes prices to move in markets are filled orders. Okay, is that clear? So when we look at the three states of a market here, just understand that, because once we get into the live markets and going forward, this is really all we're going to do. You have to keep it really simple. A market could be in one of three states. It could be in a state where prices are near a significant supply zone, right? Away from equilibrium, far away from demand, where significant unfilled sell orders exist, and that's our supply zone up here. Not this whole red area, not the entire red area, but just this little supply zone up here. It's hard to see, but there's a little bit of basing in there. Price can be at the opposite extreme, down where, demand greatly exceeds supply, where the smart money, banks, financial institutions are buying, and that's our demand zone here. Or price can be in between the two, right? Like you see in the middle here. Now I say relative balance. You'll hear people talk about, supply, demand, and equilibrium. Here's equilibrium. make sure you understand though, equilibrium doesn't really exist. There's not a price point where it's equal, where you have the same amount of buyers and sellers. And if you, and even if you did, that's still not the right way to think about it, because you'll jump to the wrong conclusion from that. What you have to understand is price in any of these markets, it's never at a point where there's balance or equilibrium. It's always an unbalanced equation that takes a certain period of time to play out. What we do know is that in this white space in the middle here, okay, we don't have any significant unfilled buy and sell orders. In fact, the picture represents the opposite, okay? Orders in the middle here are filled, okay? Filled orders. How do we know that? Well, look at all the transactions that took place here compared to the supply and demand zones. Very little trading here, very little trading here. But in this white space in the middle, right, all this, tons of trading activity. Price is able to move up and down with ease, right? Make sure you understand why. It's because of a lack of anything to stop that from happening, meaning a lack of unfilled buy and sell orders. So the white space suggests that this is a price range where all the significant orders are filled. What that tells us is price should have an easy time moving through that. So when we look at any market, time frames, what have you, we want to make sure that we know where supply is, where demand is, and that there's a nice big area of filled orders in between, meaning profit zone, so price can move through that with ease. We did that analysis on this market, which happens to be the euro. And then, of course, not long ago, when I put that trade out there, a number of people took the trade. Here's someone from our session, one of our sessions, Karen, took it for 7-1, selling short at the supply zone where banks are selling. And then price fell pretty easily through all this white space like it should, because there's no unfilled orders to stop it, down to our profit target, where she took profit for a nice 7-1 or $700 profit on this trade. Of course, that profit target was before the opposing demand zones, which is what we want. Okay, so it's understanding really the three states of a market, being able to understand, identify those 3 points on a market, right, those 3 states, and then simple rules to take advantage of that. Does that make sense? Any questions, comments on that? Well done, Karen, on that one, if you're listening. Another way to say what many people during the session did here, like Karen, is just sold short, right? Sold here to someone who was buying at supply or retail prices, and then bought from someone who was selling near wholesale prices or demand. Okay, absolutely it applies to, well, let me get to your question in just a second, all right? All we're doing is, again, identifying wholesale prices, retail prices, demand, supply, okay? And selling at retail prices, buying at wholesale prices in any market, any time frame. So, okay. So let me just read back here for a second. Yeah, does this apply to short-term charts? Absolutely. We're going to look at some short-term charts in a minute. But what here, it's your question is interesting because I have one more screenshot to go over with you, and it's directly related to what you're asking here. Yes, we want to make sure that that profit zone is big. Okay, but notice in the example in the lesson here, these are all 60-minute charts. So I'm able to identify supply, demand, and then of course the profit zone in the middle, all by looking at one chart. But that's not always the case. In fact, that's not often the case. So yeah, your question is, you'll see, I'm going to switch screens here. Okay, so this is exactly what you're asking about. So this is a post, a Twitter post I did the other day. I thought it'd be perfect for our little lesson today. And then we're going to go into the live markets and apply all this. Okay. So take a look. Here, and this is again, is did some of you take this trade? This is the euro. Remember we had the euro short at the weekly supply zone up here. And of course, as it came down to some larger time frame demand, we're able to take profits at our profit target here. But notice, looking at a weekly chart and a 60-minute chart, we were able to take advantage of one very predictable market turn and market move. Okay, but by looking at two different time frames, we're able to take it. We're able to create two different trading opportunities, all on the same, right? All with the same opportunity. Okay, so knowing that we have this supply zone up here on the weekly, and again, this was from one of our live sessions, so some of you may have taken this, but we came able to come down to the 60-minute chart and see a very small supply zone, but a very, very good one, right? It had all the ingredients that told us that supply greatly exceeded demand here in this area. So for those that took advantage of this one, you're able to enjoy a 29 to 1 reward to risk, meaning for every point, right, every point that you're risking, you made 29. Every dollar you're risking, you made 29. But that same opportunity, just taking it off the weekly, was still fine. But you got about 7 to 1 out of that because your supply zone was so big, meaning your risk was bigger, right? Your distance from entry to stop was larger. Does that make sense? Okay, so we'll look at multiple time frames. Now we're going to go into the live markets. And this is exactly what we're going to do to find some trading opportunities going forward. Yeah, what we're looking for is very big profit zones and very strong and significant supply and demand zones. Okay, to identify and answer the two most important questions. Where's price going to turn and where is it going to go? Okay. Yeah, when we say, Nick, when you say curve, you're talking about, just the general supply and demand curve. Of course, that's an important concept to understand, right? But the better you get at identifying your supply and demand zones, you're not going to have to do kind of this maybe a little bit of extra work to say, okay, here's the overall supply and demand curve for this market. But we'll get there. And yes, you definitely don't need to see that on one time frame. That's why when you hear someone say, hey, what time frame do you trade on? I'm a 2-minute trader. I'm a 60-minute chart trader. When you hear someone say that, they're probably not making money. They're probably not consistently profitable. And I'm not picking on them. What I'm saying is, it's not the right way to look at charts. It's not the right way to do your analysis. We look at multiple time frames. Okay, and you could just see what I put here, right? If you read this. I've never focused on any one time frame to trade or make trading decisions. What I focus on is opportunity and use multiple time frames to find, assess, and plan for that opportunity. Does that make sense? That's how we're able to find, consistent 10 to 1 or greater opportunities. They're out there all over the place. Okay. All right. Let's go into the live markets and let's put all this into practice. And just like these two trades, these 2 euro trades, let's find some more low risk, high reward, and high probability trading opportunities. Okay. And again, I don't expect anybody to completely get this and master this after a 1-hour session here today, but we're just getting started. Okay. Let's start with the dollar. Let's start with a chart of the dollar. So we're going to start with a couple charts that well, we'll go to a chart in a minute that we don't normally look at, but I think you'll understand why it's important today. So when we take a look at the dollar, there's well, we don't need to look at the monthly chart. Let's go to the weekly. There's the weekly chart. So I know those of you who've been in these sessions for a while, you've seen this level, probably traded off this level. There's the demand side. I got to fix that. Sorry. Let me just get those lines are the wrong color. There we go. So all we've done is just traded from demand to supply, and that's how this works, right? That's it. I think there's one next week, Alexander. But recently we've come back into this supply zone, right? And obviously the second time up here we went deeper, as we should, because every time price comes back to a level, you have less unfilled orders, meaning that level is getting weaker. No worries though. If this market does go a little bit higher, you're going to run into supply zone after supply zone after supply zone. but we'll get to that in just a bit. But make sure you know where we're at, bigger picture here. From here, we want to go down to the 4-hour chart, okay? So again, you might say, well, what about all this giant risk here? Am I really going to, is that going to be my, you know, big stop and all that? No, doesn't need to be, because when we come down to the 4-hour chart, so we have a supply zone just above. Price hit this level hours ago, yesterday, but barely touched it. Okay, so we have all the ingredients here that tell us this is a significant supply zone, right? And of course, price came down to here, 96.04 so far. Okay, and then we came back up to this level and just touched this level and fell. So the fact that we just touched this, what does this tell us about the supply zone up here? You know, lots of sell orders or just a few sell orders left over? You mean, is there any, does it suggest there's supply left over or not? Right. Yeah, it suggests that there's probably still some supply up here. Okay. All right. The other point I want to make is, because you really need to properly assess profit zone. So help me with this one. I want to ask you a couple of questions here and let's see if you can figure this out. So price came down to 96.04 before returning to the supply level. And we'll likely take this again. Okay, so that's why we're spending a little time on it. And we're spending time on the dollar first because, you know, if the dollar's got supply above, other markets are going to rally. If the market, you know, if the dollar's going to go up, we have a bunch of other markets that are going to go down. But let's get back to this for a minute. So the fact that price went all the way from 96.90 down to 96.04, what does that tell us about demand, right? Because we have a pretty good idea of where we have some supply, but what about demand? Well, with the market coming down to 96.04, that tells us that there can't be any significant supply above 96.04, right? You follow me? This move doesn't tell us where demand is, but it tells us where it's not. Because if there was demand at or above 96.04, price never would have got down to 96.04. Literally, it'd be physically impossible. Especially if there was like a big bank or financial institution with significant unfilled buy orders above that price. You'd never get down to that price. Does that make sense? And what you'll typically see is however many candles or however much time it took price to come down to this level, you're going to do the next move in half the candles or less. Does that make sense? Right? There was obviously some demand here. I mean, look at that. That's a nice demand zone. Okay, especially this bottom half of it. It's a great demand zone down here. But now price has been down here. So some of the buy orders that were sitting down here creating that demand, causing that to be demand, are gone, right? Those orders were filled here. So anyway, I think you get the point. So we have some supply above in the dollar, suggesting the dollar can come back down. However, we've been up here before, so you know, the likelihood of price going up and deeper into this level is equally as good, as strong. So just know that this is here, and that'll help dictate what we're going to do in other markets. From there, I want to go down to the 15-minute chart. Okay, so and just let you know that down around 96.35, actually specifically, let me give you this level right here. I meant to change this earlier. Okay, we're going to go right down to 30. So 96.30, right, with a stop below 96.25 down here, right? You'd want your stop somewhere down in here. And again, the way you know, I teach it in the course, this is all very mechanical. Entry, stop, target. Simple rules, very few rules, but simple rules. So watch 96.30 for a bounce to the upside in the dollar. And again, any decisions we're going to make in other currencies against the dollar, or maybe some commodity markets, or even some of the equity index markets, we need to know where our supply and demand zones are in these markets. Okay. I'm just reading back in the chat here. Sorry about that. So you're saying if there's a zone that is a good structure above 96, it will qualify as demand. Yeah, this level's okay. I mean, this doesn't qualify as a great zone by any means. I wouldn't put anything more than minimal risk on this. But, and the other reason I say that is because we have, this just above. So you don't have a great profit zone. But this is more that the levels we're going over here in the dollar are much more of a guide for what we're going to look at next. Okay, so let's do that. Let's go to the euro, and again, hopefully some of you took that big move in the euro. Anybody with us here today? I don't know if you've been in my sessions lately, but did you take anybody take this level? I know a number of people in the morning sessions have, or that one. This is again just from a couple weeks ago. It's a level we put out there. Anybody take any of these? That one or the much bigger move? And if not, it's okay. Some of you have been in that session. Yeah, and I'm trying to talk through this, fairly slow to make sure you get the concept. All right, let's go to the euro, and let's start with the weekly. Okay, how you doing, Ben? All right, let's start with the weekly chart of the euro, just to make sure again, everybody knows. Here's that demand zone. So we went over this last time, and again, we went over this for quite a while in the FX Street session. So I don't know if anybody was able to buy down here either off this time frame or another time frame, but just know that again we have demand below. So if the dollar does go up, that'll push the euro down into these demand zones, and you're not likely to see the euro go through these levels anytime soon. So if you're sitting in this position, then you'll see some the levels we're going to go over next are going to matter to you. So there's our weekly. Let's go to our 60-minute. We do have a level sitting down around 113.20. That's 113.20. Again, it qualifies. It's not a high probability level, but it certainly qualifies. I would take it and be comfortable with the risk. We also have a level sitting just above, as you can see right here. So let me just put a circle around it here, right there. There we go. Okay, sorry about that. I'm in the middle of playing around with different colors and charts and stuff like that. So there's 114.30. We're sitting just below that. Don't be surprised if price hits this level and comes back down. And sitting just a touch higher. Okay. Well, here is that level. So I marked it off for you just so you could see it really clearly on this time frame. And again, this should be 114.30. No, it says 28. There's the 30. All right, so just keep an eye on that, sitting just above. We do have this little level here. And for those who have been with me for a while, you know that typically helps this level be a higher probability area because you're going to remove it's going to take quite a bit of demand to get through this, okay, to get up to that, meaning you'll likely have a larger imbalance up there. Okay, so we've spent quite a bit of time on the dollar and the euro dollar. And before we go to other currencies, though, I want to take a quick move. I never do this, but I think it's important today. Let's go over to the bonds, especially the 30-year. All right. So for me, this is what's happening right now actually is key. Take a look at the 60-minute chart of the bonds. Right? Because when you look at some equity index markets, you have some little supply zones above that I'll show you. But the bonds are suggesting if this area right here holds and the bonds come down, you're likely going to see the equity index markets rally. This will affect the dollar, everything else. Does that make sense? Yep. Yeah, I see it in the chat there. Yeah. Yeah, Nick. Yeah, I'm definitely going back to the gray charts. This is hard on my eyes also. So yeah, watch this area right here. This level today and into tomorrow is key. Well, I guess there's some of the markets are closed tomorrow, but Watch this level. We seem to have a nice profit zone below. So if this holds, you'll likely see the equity index markets rally quite a bit, because I think a lot of people are going to have a tricky time with the equity index markets today. We'll look at the S&P and NASDAQ and everything in a few minutes, but it looks like there's some pretty clear supply zones above in those markets. And could those levels work? Sure. But if this level in the 30-year holds, you're probably going to see price go through those levels. And that was kind of the whole point, or a big part of the point, when we went over this. Okay, the word I didn't mention here when we went over this is location. One of the number one questions I get, one of the top questions I get is, hey Sam, these two supply levels looked identical. How come one worked and one didn't? Easy, simple answer. Location. Okay, we have specific rules around that, and that's something we need to dive into, deeper as we go along, because I think people get pretty good at identifying, the picture of a quality level, but that location filter tells you which levels to take and which ones not to take. Does that make sense? All right, so that's a big deal, and that's kind of what I'm getting at here. So just know that 30-year level is there. And now let's go back and look at a couple more currency markets. Let's look at three more, and then we'll move on to the equity index markets. So we went over the euro. We've got our demand and supply zones to buy and sell at, right? We found, I think, some pretty good areas where banks are clearly buying and selling. So we can buy and sell there also. Let's go to the Aussie, and we'll start with the 4-hour chart. Okay, so here's the Aussie. We do have a little supply zone sitting at 72.90. That's 72.90 up here. You can see the level again on a 4-hour chart. And then, of course, here's another level we've had for a while, and it just met entry, just the other day. So price just touched the level and fell, suggesting there's, quite a bit more supply up there. Remember, too, this is a good location level. So this level up here, because it's above all of this trading activity, remember, well, let me finish that sentence. Because this level is above all this trading activity, it's always going to be much higher probability than this one. So again, even though I would argue that the structure and picture of this level looks better than that one, that'd be my argument. But I would still put my money on, if you force me to say, hey, you can only choose one level to trade, this one or that one, I would have to pick the upper one, because, and not just because it's higher on the supply-demand curve, okay, but because this level up here is above all this trading activity. And don't forget our fundamental foundation lesson, okay? The presence of lots of trading activity means the absence of supply and demand, okay? The other way to say that is the presence of significant supply and demand means the absence of lots of trading activity, right? Okay. Yeah, Nick, we're kind of doing that here. So does that make sense? This is inside of all of this trading activity. The reason why you have all this trading activity in here is because you have a lack of significant supply and demand. And when I say that, we mean big unfilled buy and sell orders, okay, where this is above it. And I'm going a little overboard here explaining this. This isn't one of our normal trading and analysis sessions. If it was, we'd be flying through these markets, giving you the really good trading opportunities. And so we're just kind of taking it slow here so you kind of learn and hopefully make some money in the process. So we got that level sitting up there, 72.90. Again, we're looking at the Aussie dollar. From here, we'll go down to the 10-minute chart. And I know we have some demand. There it is. If prices hit our supply and fall, or if they fall before that, we have a buying opportunity at 71.80. Okay, let me bring this down again. 71.80 is where the meat of the level starts. So I would suggest if you are interested in this opportunity that you might want to consider getting in at 71.82 versus 71.80. You're going to have a lot of competition to buy down there, so that's what the chart is suggesting. Yeah, certain price action column we consider in there, and others we don't. All right, so there's the Aussie dollar, both on the supply and demand side. So again, if you're looking for a high probability shorting opportunity, you'd probably wait for the upper level. If you're okay taking a little bit lower probability opportunity, you take the lower one also. What you can do is, whatever your risk parameters are, you can take a minimal risk position size on the lower one and increase that risk on the upper one. Okay. Again, profit zone and actual dollar risk reward with position size, that all comes into play here. And again, I know for some of you that are new, I'm throwing a lot at you, but just want to make sure we cover things. And okay, let's keep going. How about the pound? And I'll speed things up as we go along. So with the pound real quick, let's start with our 4-hour chart, and then we'll quickly go down to a smaller time frame. We went over this level for a while in our last FX Street session. Anybody take this trade up here in the pound? Curious because I remember we spent quite a bit of time. This went into the level by just a few ticks into our 3170 area, 131.70. And again, the nice thing with this one was the massive profit zone below. Remember, here's the initial drop in price telling us there can't be any significant demand above this price. Therefore, we have a really big profit zone below. Okay. For those, again, that spent time with me in the morning sessions, if you had an easy money target in here, right, we have our easy money and big money target, all mechanical. That easy money target was easily achieved. Okay. Yeah, Marco. So we've got these sessions. I've got something else for you guys coming up. You'll see it real soon. Okay. No worries. So let's go down to the 10-minute chart. Oh, I'm sorry. Wait, that's the wrong time frame. Let's go to, oh, here. Go back to the weekly real quick. Again, just right, we've come off our supply zone, just so you know where you're at in the big picture. But with that, make sure you're aware that we have some demand below 125.50-ish. I know that's anywhere about 300 points away from that, but price could be here, right, in no time. If the dollar goes, back to its area, you could see the pound, down there. So, and if the pound rallies back up into here, we'll take another trade up there. No problem. All right. But with that, again, we want to stay out of this middle area. Here, the orders are filled. Low probability. Let's move on. One more quick one, and then we'll get into some other markets. Let's look at the dollar Canadian, and let's start with the weekly chart real quick so you know where we're at. Right, we've rallied back up to a price level, and we found this supply zone here in FX Street. But we would take it again. Obviously, major banks around the world have lots to sell at this price point, the 134 price point, and we're kind of crawling our way back. The market's crawling back up there, so just be aware that that's up there. Here we can put on some longer term positions, and everything becomes higher probability the closer you get to that level. Let's then go down to the daily chart, and here we have some closer supply that's closer. This is why we use multiple time frames. Okay. So we use multiple time frames because you'll never see this level on the larger time frame. So sitting up around 135.88. That's 135.88. Okay, you can call it 136. 136 is really where the meat of the level comes in. But just be aware of that. This is a high probability zone because we have this stuff sitting right before it. For price to get through this, it's going to take a lot of demand or buying. Meaning, if and when price reaches the 136, it will reach this price point with fewer buy orders because of what needed to happen just below, creating a significant imbalance. And that and only that is what causes prices to turn. Yeah, Alexander, if you really notice, I'm only giving you really. I'm only going over one supply and demand zone in each market. We're just going over a bunch of markets, so that's why it kind of feels that way with so many zones. So I have two ways that I find these zones. So I have an algorithm that finds the zones that I will be able to share with you soon. And I mean, I've been using it for quite a long time. But anyway, we'll talk about that another time. And the second way I do it is I just spend time. You know, I spend time finding these levels. I don't need the algorithm to do it once your eye is trained to do it, but that's how I do it. Okay. And again, it's just following very specific rules. We don't have time today to get into all that, but I promise you we will shortly. So that was our level on the, let's see, oh, the 4 hour. Okay, everybody clear on this one? Well, that's not the 4 hour. So everybody should be clear on this 136. I'm sorry, that's not the right one. Okay, weekly. Ah, there it is, the 136. So that's on the daily. Okay, so if you trade the Canadian dollar, you've got that. Now we're going to go down to the 4 hour chart. Okay, you'll see sitting just above current price. So if we make a new high, we do have a little level sitting up here. It's not as high probability as the 136, but 133, you know, just above 133.25, this market makes a new high into here, and the dollar, right, hits its zone. You might see that quick little turn, and this would be for a kind of a longer term day trade, so to speak, that if you're looking for that daily income, this might be an opportunity for that. Yep, we're going to get to demand shortly. How about next? So for demand, we have to come all the way down to, let me take this down to the 10-minute chart. According to the chart here, banks are starting, you know, very interested buyers around 132.10, but bigger buyers around 131, 131.95, right in here, probably a little bit before that. But this is the area where the chart is suggesting there's quite a bit of demand. All right, Nick. So that's where your demand is kind of down in here, just 132 and below. This whole area in here, 132 to 131.80 in this area. You've got like 2 or 3 levels on top of each other on the smaller time frames. Then let me go down to an even smaller time frame, which I'm usually very reluctant to do. This already. So during our session, sorry about that. I should have started with this chart. I had these levels for you from earlier, but I didn't realize that we actually got down there. But anyway, this is the little level I was going to give you guys. So I guess if we come down, yeah, we didn't touch the lower level yet. So okay, so this first level is, I've already used that. But if price comes down again, 132.66, we have another little demand zone that's in the right location that qualifies, right? Yeah, so Nick, if you short at one of those levels up there, your profit target would ideally be before the opposing demand zone. Okay, we want our profit targets to be very attainable, and everything needs to be rule-based. All right, so watch that. This is a little daily income level down there. First one's working out fine, but don't be surprised if price comes back down. And you're probably going to run into some trouble up here, you know, just above where price is at now. All right, let's move away from Forex and into some other markets, if that's okay. Let's look at some futures markets. Yeah, we started with the euro dollar. We spent quite a bit of time on the euro, and we had our, I believe we had on the hourly and the 15-minute chart, we found our supply demand zones there. So I want to take you to the S&P. Let's start with the S&P. You know, looking at the daily, for those, again, that have been with me for a while, right? We've been talking about this. We're kind of in the middle. You know, this week we've drifted a little bit lower. Well, it's probably more than a drift to some of you, but this is expected. We expect prices to move very quick and very freely through this area. Why? Because the only thing that would stop that are significant unfilled buy and sell orders, meaning demand and supply. We see, looking at the larger time frame chart, those areas are much lower and much higher. Okay, so we are in a range where you have a lack of significant demand and supply. Orders are filled, prices are going to move quickly. Okay, volatility is going to move up. I'm still expecting prices to come down through the February lows and down into these levels. No, the outlook has not changed there. But remember, too, in the middle here, you're going to have some wide and whippy moves. Let's keep going. And let's go right down to the 4-hour chart. Okay, so here's that level I was talking about earlier. And I've got another one. I've got two more, another time frame to show you here in a minute. But here's that level I think a lot of people are going to look at today. Right around 26.88. They're going to say, wow, there's a perfect supply zone there. So it looks okay when you look at the 4-hour chart. But as you go, but when you go down to smaller time frames, um, you know, that area is up in here, which can cause a turn in price. But you also have this little level sitting before it, and you're probably going to have some demand below. So this coupled with, let's go to the 30 year, right? And again, if this level doesn't hold, that was the whole point. We need to watch this. If this level does not hold and prices go kind of through it, you're gonna see, then our plan is gonna play out, right, with the S&P and dollar and all that. But right now we're just in the middle of this. Okay. So again, if this does come down, watch the equity index markets move higher. All right, let's go back to the S&P. So the two areas to watch are really the 2688 and higher. And again, you're going to run into a little bit of trouble around 2676. Then, of course, let me take you down to the 5-minute chart. If you're looking for some daily income, that is likely to start right around 72, I believe. Okay. So watch that. And again, the meat of that area is a little bit higher, right around 74. Let's go over to the NASDAQ. And again, just a real quick reminder of where we're at in the larger time frame. Okay. We've our longer term, wealth building position short in the NASDAQ. I know a lot of people from the morning session are still holding on to options plays or what have you from that, because we are expecting that move down through the February lows. So there's the daily chart of the NASDAQ, just so you know where you're at in the bigger time frames. I think the weekly will help you also to see, kind of what's below, what's above. We saw supply above on the daily and demand below on the weekly. All right. Your intraday type levels are going to be very similar to the S&P, so we don't need to spend a lot of time there. If we go over to a market like here it is, based on that dollar chart, 30 year and all that. Let me take you quickly to copper, and then we'll come back and look at some of our some more markets like oil and gold. We'll go over all those. No, Haji, it does not have to be inside a bigger time frame level. It doesn't at all. It's fine if it is, but it doesn't need to be. Remember, you want your levels out. You want your levels to be in a location that suggests there's significant supply and demand there, because that same picture could be inside of a range and price blows right through it, and that's where people get confused. Okay. All right, let's go to copper real quick, and we'll start with the daily chart, just so you get an idea. If we do get a big rally in copper, we've got three levels that I'm going to be very excited to short at, starting around 129.50. Okay, right up in here. And then let's go down to the 60-minute chart. You'll see we have a couple demand zones sitting just below, right on top of each other. And following our rules, let's just put those levels in. Okay, there's that. And then of course you have this another level pocket of buy order sitting just below it. All right, so you can see the price points here. Not a whole lot else to talk about. We know quite a bit higher because we just looked at it. So these demand zones seem okay. Of course, again, these are inside this whole range, so not high probability. The level down here is not higher probability. Doesn't mean we don't take these. They could certainly work. You just don't want to go overboard on position size here where you would down here. And then, of course, we go down to the, well, I say of course, but if you're looking for daily income and you're a short-term trader in copper, if you come down to your 5-minute chart, you'll see there's likely to be supply coming into the market. Right up here, just above. Actually, this level needs to be just a touch higher. There we go. Makes sense? So you have two supply zones sitting on top of each other on your smaller time frame chart. And again, with all these, location is key. And during these sessions, I'll go over that more and more, and I will have something, a special to show you our next session that'll put all this together. So I think that's next week, if I'm not mistaken. Okay. In fact, I can tell you when it is. Yes, I believe it's next Thursday. So you'll hear, I'll be able to go over something with you that'll kind of be a game changer for all of this for you. Okay, there's copper. So we've got our demand and supply, two supply zones and a couple demand zones. How about oil? Anybody take our oil short from weekly supply down to one of our two daily demand zones? I know we've been extremely bearish oil really since 76-ish because of that big weekly supply zone up there. Now we've come down into these, we had a really nice bounce off the first one, but remember, like we said, don't get married to this one because we did have supply up there and you still had some profit zone below. So that level is now, gone or used up. And now we take the lower one. Okay. And you can see price has not touched this level yet. So let's call this 52.50. Okay, 52.50 down to 51.50. You need to stop below that if we look to take that trade. So make sure you're aware that there's that demand sitting just below down there. And as we go to the 4-hour chart, okay, our supply in oil, the chart is suggesting it's around 58.80. That's 58.80 to about 59.40. Right? So basically your profit zone or the area, the price range where oil should not have a hard time moving through is really from around 58.80 to 52.50. Again, 52.50 to about 58.80. That's a nice big range. If you trade oil, that's a lot of points, right? And we were able to just catch, a bunch of points, to the downside. And, I think actually it was this one. Yeah. Okay. So this is that oil trade from our morning sessions. All right. So that's oil. Let's go to gold. Let's start with a weekly, just so you know where you're at. We're not going to spend more than a minute, but notice we're right in the middle, right in between. Okay, so again, pay close attention, right? Remember this? Supply, demand, and then this middle no trade zone. Okay, so you can see when we go to gold, we're right in the middle. So understand the positions that you put on here are not high probability because you're not out at either of those extremes where supply exceeds demand or demand exceeds supply. Okay, and remember what you know like for those of you that took this trade up here, what when you get out to the supply zone, what pushes price back to relative balance is the competition to sell. Okay, so competition to sell at supply, competition to buy at demand eliminates itself. And it's that competition to buy and sell that forces price back to the middle. It's that simple. And the nice thing is it never changes across any market, any time frame, any financial purpose. All you need to do is be able to train your eyes to see that on a price chart. Okay, and I know with the internet and everything else, with so many strategies and thoughts and ideas coming at you, it's probably not easy. But anyway, I think you get the point. So that's where gold is on the larger time frame. Let's now work our way down to, let's go to the daily. So you'll see there is a level that comes in a little bit before that level, the areas I just showed you on the weekly, but that's a little bit higher. I wouldn't be surprised at all if we got there. That's 1240 is where it starts. We're at 1226, so not that far. And let's go down to the 4-hour chart. And let me scrunch up the chart a little bit. So not a whole lot to talk about here. If gold does come down, even though again it looks like we're in the middle, which we are in the bigger picture, we're likely to get a really nice bounce higher in gold from the 1183. Okay, 1183. But notice I'm not doing much on the smaller time frames in gold. Why am I staying away from that? Because of this. I know if I put something out there, it's it might work, might not, but it's not high probability like a lot of the areas we go over. Okay. And notice, the theme of some of you probably maybe been in my sessions for years. I stick to the high probability turning points with the big profit zones. What I go over all the time are opportunities that offer us hopefully 10 to 1 or greater that also carry a high winning percentage. So that means we're not going to get a ton of trading opportunities. We will. Sometimes they come in bunches, right? If price was up here, we'd have day trading, shorting opportunities like you wouldn't believe, and we will. And we don't have to wait for the weekly to do that. There's plenty of day trades that we're able to take and execute wherever price is in that bigger picture. All I'm saying is, my main point is, location matters. It really matters. Any other markets you want to look at before we wrap up here? No other markets. And again, I can let me give you this. There's my email address for those that don't have it. Sidentrader@gmail. Okay. I was hoping someone would ask for the yen. There we go. If not, I was going to go there. It's literally next on my list. Now, I didn't put any levels on the yen, so I thought maybe we would do that together. So I always start with the larger time frame really quick. Not really giving us any information other than we're in a range here where we have lots of trading activity. Okay. We go to the daily, doesn't help us out either. So notice I don't spend more than a couple seconds there. On the 4-hour, now I'll spend another minute here because all of a sudden I see, you know what? We might have some supply up here. There's one candle here, which I would never call a supply zone, but what that does do is says, hey Sam, go to a smaller time frame and investigate this area. So we'll do that. And then we also have what looks like some demand down here. So let's put this level in, and as we move to different time frames, I'm going to assess location and everything really quick. Okay. The nice thing is once you get this, it shouldn't take you more than, you should never be spending more than, I would say, 5 minutes or so on any market, maybe 10 minutes, but usually it's going to be more like 5 minutes, right? Just going from bigger time frame to smaller time frame, identifying your trading opportunities for daily income weekly income, meaning trades that last a few days, and then of course that wealth building account. Next session, Ali, I believe is the 29th, which is next week, and I will have something really neat to go over with you there that I can't go over today. So you can see the price points down here. We're looking at a 4-hour chart. We do have some demand in the end down here, and that's below all this trading activity. So that's good. We are now going to go up and investigate the 113.35 level. Let's look at that on an hourly chart. So there it is. Okay. Okay. So keep an eye on that. The only downside to these, okay, the only downside to these is you have a little bit of demand down here. Now, if price coming down now can fill the buy orders here, then we now have a bigger profit zone for the supply zone above, down to here. But you're going to have more, you're likely to have some more buy orders down here that need to get filled. Okay, so, watch this area to this area. We're already on an hourly chart, so relatively small time frame there. All right, so see, we've got a nice little opportunity from our friends at FX Street. And yeah, the next session is on the 29th. You can click on that link there it's in the chat if you like. And okay. All right, so you've got my email address. Hopefully the session was helpful. Usually we go much quicker, but I wanted to kind of slow it down today to help you really start to understand this, the whole concept of, answering those two key questions. Where's price going to turn? Where's it going to move to? That's it. We follow very simple rules to get there. And if you're in the States, have a great Thanksgiving. If not, have a great weekend and week, and we will see you next week. And again, next week, I do have something to go over with you that I've never been able to share with you before. So looking forward to that, and we will talk. We'll talk then. In the meantime, just email me if you have any questions. Have a great day, everybody.